Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's head now to D.C. For the latest when it comes to the potential budget. House Republicans passed a budget blueprint on Tuesday, still has to go to the Senate. It looks like tax cut chances are rising, although it doesn't come without cuts to some major programs, potentially. Erik Wasson is Bloomberg Congressional Reporter and joins us now. So first, Erik, just give us the lay of the land. What did the House pass yesterday?
So this is a $4.5 trillion tax cut blueprint. It calls for $2 trillion in cuts to mandatory programs such as Medicaid and food stamps, and would raise the debt ceiling by $4 trillion. This is the first step after it's, if it was adopted by the Senate, then they would have to produce a bill that actually details the cuts. And as long as that bill adheres to the budget, it can pass the Senate with just 50 votes instead of 60. This is called budget reconciliation. It's the way Obamacare was passed. It was the way the Inflation Reduction Act, the green subsidies under Biden were passed. So it was really an achievement for Speaker Mike Johnson. The House Republican conference has been very divided. You have moderates who are very worried about Medicaid cuts. You have conservatives who at the last minute flipped their votes and allowed the bill to the budget to pass, but wanted even deeper cuts. They wanted to see this budget fully pay for itself. But Trump lobbied them and was, in fact, calling them at the last minute to get them to flip in a dramatic scene here last night. So this is a positive. I'll basically say my assumption has been that the Trump tax cuts of 2017 do get extended, but I was thinking it could be more like December, right up against the deadline. This makes it more likely that it happens in May. Will give businesses and individuals a better heads up as far as tax planning. It's just a positive sign for the tax cuts overall.
What are next steps, Erik?
You know, the Senate is not really going to just put this House budget on the floor and pass it. They want to actually make larger tax cuts. They want to basically do something which is assume that the Trump tax cuts, $4 trillion, don't cost anything. This is called a baseline shift. It's very technical, but it would be kind of a budget gimmick. And then add a lot of things like a state tax repeal, fulsome no tax on tips, no tax on overtime, probably trying to make the tax cuts permanent rather than 8 or 9 years, which is what my estimate is of what the House bill would do as far as individual rate cuts. So they're going to make those changes. There's also more squeamishness among senators for actual spending cuts, such as to Medicaid. So they may bring that down. So I'm expecting substantial changes. There'll be backdoor negotiations. A compromise will emerge, and then we'll see if it can pass both the House and the Senate.
Matt from Westchester writes in and asks, how about the salt tax deduction?
There's some runway to do that, on the House side. But I think that, basically the Senate would have to create more room or they would have to find deeper cuts. Now, there's a lot of options they can do in order to allow for SALT. You could do things on the tax side, make it more difficult to apply for a child tax credit, for example, or do a stock buyback tax increase. But, this is all going to be very controversial and create winners and losers. But certainly there's a group within the House Republican Conference from New York, New Jersey, and California that will not vote for a tax bill without some kind of SALT, tax cap change. Right now, it's limited to $10,000. That applies to a couple as well as an individual. They may double it, allow it to be 20 for a couple. We could see another type of rise. I don't think it's going to be completely uncapped. It just costs too much.
So how hard was it to get this done? Like, how much corralling did President Trump have to do, or were House Republicans relatively united?
It was the House Freedom Caucus is often pinned as being a big obstacle to leadership. They came on early on as long as they got this $2 trillion in cuts. So that's a big chunk of what the conservative, but they're what they call the affiliates, people like Victoria Spartz, Thomas Massey, Tim Burchett, and Warren Davidson, who at the last minute were saying, we are not voting for this. We will never vote for this. They were really dug in. In fact, there's a scene I've never seen in my almost 20 years up here where they sent everybody home. Lawmakers got in their cars, were leaving the Capitol, and 8 minutes later, they said, everyone come back. So in those minutes, I think President Trump got to some people. They started to flip, and they ended up passing it. But it was a very dramatic scene here. We, in fact, even saw some Democrats coming, one who had just had a baby and one who had just had surgery, coming in with a walker to try to put the pressure on Republicans to get every vote that they needed.
And Eric, we've got about 30 seconds left, but this seems like a real big win for President Trump. Does this signal even additional momentum for his agenda?
It does, but there's a lot of hurdles. Right now, a lot of moderates voted for this, saying it's just a plan. There are no real cuts. But if you see an $800 billion cut to Medicaid, that goes beyond work requirements for able-bodied adults. That goes beyond, improper payments. That's things like capping, Medicaid, block granting it to the states, where you'll see actual, impoverished people go without health care. And that's going to cause, I think, an uproar probably that a lot of swing district moderates are not prepared for. So, it's going to be very difficult to get something through, because if they don't make those cuts, those conservatives that they also need will not vote for the bill.
All right, really appreciate that. Thank you so much for joining us. Great reporting, Erik Wasson, a Bloomberg Congressional Reporter, literally joining us in a hall somewhere.
No, that's the Capitol Rotunda underneath the Trumbull painting.
Okay, my point was that he's like in the weeds. Is my point.
That's the surrender.
Real reporting, boots on the ground. He's that kind of.
That
my
painting
point.
is the painting of the surrender of General Burgoyne.
Thank you.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
All right, I'm Alix alongside John Tucker and Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. We also love checking in on some of the companies that are basically running the show when it comes to us being able to turn on our lights, or when it comes to us turning on our cars, or actually like starting our cars, maybe a different way to say it. And one of those companies is American Superconductor. The ticker is AMSC. That's on the NASDAQ. You can find it there. The stock is currently up by almost 6%. It recently announced its fiscal third quarter results, and the CEO, Daniel McGahn, joins us now. So, Daniel, you basically make all the stuff that allows us to turn on lights. Is that a fair way of saying it?
Yeah, we don't really make the power or move the power, but we make sure that the power is where it is when it's needed.
So what does that wind up meaning? So you conduct the electricity, basically?
Yeah, so if it's an industrial site in a manufacturer that needs power at a certain level, of certain frequency, we modulate that and make it the right way for that factory. Same thing if you're trying to deal with bringing generation onto the grid, or even different spots within the grid itself to bolster and make sure that the power can go where it's needed.
All right, that sounds critical, sounds important, but it doesn't sound sexy. But your stock is up 78% over the past 12 months. Why do you think that is? Are you guys getting caught up in that AI and the need for energy? And
I think we're getting caught up in the need for energy. I think there's a lot of drivers that are changing our need for power. If you think about everything you do in your day now requires electricity. And that could be from healthcare to data to semiconductor manufacturing and everything in between. So power becomes more and more critical. We're becoming more dependent upon it. And the grid really wasn't built for the modern era of electricity.
And from that perspective, I mean, just for a super nerdy moment, you guys also make the conductors, right? Like the thing that, so if you have a wind farm and you need to attach it to a grid, there's like a piece of equipment that you need to attach it. You make those, and those are in super, super, super tight demand, like tons of demand, not enough supply. Doesn't matter what kind of power source that is. Am I accurate?
Yeah, and many of the suppliers are from overseas as well. So we're kind of unique also being an American company making product in America with Americans. And I think that fits very well in today's climate where we're trying to push the country.
So what are the drivers for your company right here, right now? I know you recently reported earnings. What did you identify as the drivers for your business?
A lot of it is this further need for demand. A lot of it, we're seeing our business start to ramp really with the reshoring of manufacturing capacity and capability in America. All those operations need power. So we see expansion in manufacturing that's starting to happen, particularly in these critical elements if you want to deal with cars and chips and AI and all those things. We sit kind of secondarily that we help enable the power to be there, but more and more operations are becoming more dependent upon electricity.
So from that perspective, does it matter to you where the electricity comes from? In that, does the policy from a Biden administration and transition to a Trump administration on, say, energy and climate, does that matter?
Well, I'll say something that may not be popular, but I'll still say it. I think that the end result and desire from both are the same. We want to make sure that we're building an economy in America for Americans. I think that was consistent with the last administration. It's definitely consistent with the current administration. The question is the policy and how. How do we help enable it? Are we trying to create a market that companies want to invest in, or is the government trying to help foster that through money and through policy that is more economic? At the end of the day, for us, it doesn't quite matter. The problem is still the problem. The grid needs to be improved. Utilities are working on that, but as more manufacturing capacity comes online, there's need for higher quality power, and that's where we come in and help solve those problems.
Who do you compete against?
A lot of the big guys from Europe. And what we found is...
An example, would that be like Siemens? Or?
Could be Siemens or ABB. Locally here in the U.S., a small company called General Electric.
Yep. Okay.
But what we found is over the past several years, our largest competitors have become very good customers. And what we found is what we offer, the uniqueness of what we do and the service that we provide, it complements their offering. And I think they're starting to understand that we're not really a threat per se to their business. We're a helpful solution to the end customer.
What inputs do you need for your business? So what things are tight for you? What things do you want to help change?
When you say inputs, I think supply chain and
that's
capital.
That's what I'm trying to get at. So is it like the raw materials that you need to build stuff in the U.S. to then sell?
Yeah, almost everything that we make in the U.S., so probably 85% of our business is here, home in the U.S., manufactured here. Almost all of our supply chain, probably more than 95, 96%, is sourced in the U.S. So the current climate really puts us in a unique opportunity that we may have unique opportunities presented to us because we are American made by Americans, supplied mostly by American suppliers. When people talk about tariffs and these kind of external policies, they don't have a great impact on what we do. Now they may. I don't know how things are going to sort out. There's a lot of rhetoric, and then we'll see how reality translates from that rhetoric and really what gets put in place. But a lot of this is trying to push the country in a certain direction, and I think that general direction is good for us.
So are you having conversations with your customers now? They may be calling you and saying, hey, Dan, we're a little nervous about what might be happening over the next 3, 6, 12 months in terms of tariffs. Are you seeing that in your order flow, or are you seeing that maybe just in conversations you're having?
Yeah, we're seeing that from companies in Canada and Mexico. We're seeing that to some extent, some companies on the continent of Europe. But certainly in the U.S., they're comforted by the fact of where we make it and how we make it and where we source product from.
Some of the headlines over the last couple of days have revolved around tariffs on things like steel, aluminum, copper was thrown into the mix yesterday. If that winds up denting demand, as in we're not going to build as much manufacturing or industrial sites because it's just really expensive, how does that trickle to you?
Well, I think the opposite's going to happen. The need is going to persist. The question is, can it absorb the cost? And there's going to have to be a way to figure that out and find that out. But I think all of the things that go into the electric grid use all those materials. So they're going to have to get sources. And if it makes American-sourced product more competitive, then so be it. From my standpoint, it doesn't directly affect us because we're already sourcing most of our principal equipment from the U.S.
Interesting.
All right, Dan, great. Thanks for joining us. Really appreciate it. Dan McGahn.
Come back.
AMSC, that's American Semiconductor Corporation. They're up there in Massachusetts. It's a publicly traded company on NASDAQ. AMSC is the ticker. I put in there, so we appreciate that. Dan coming into our Bloomberg Interactive Brokers studio in New York City. Red Sox fan?
Of course.
Oh, jeez. All right. What are you going to do?
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. You can also check us out on YouTube as well. Obviously, the main event here is going to be Nvidia after the closing bell. The options market is looking for anywhere from about an 8 to 9% move to the up or the downside, which could equate to something like $300 billion in market cap. So that could be a very sizable event. So I want to get you a preview here of that and kind of what to expect in a broader sense. Joining us is Matt Stucky, Chief Portfolio Manager of Equities at Northwestern Mutual Wealth Management. Matt, good to see you. All right, do my homework for me. What am I looking at for Nvidia?
Well, it certainly is the event of the day. Look, it's an interesting report that we're going to get after the close, and specifically to the company. You're looking at a ramp up in Blackwell production as well as Blackwell revenue, but that needs to offset a deceleration in Hopper revenues. And as of Q3 of Nvidia's fiscal year, that was $27 billion worth of revenue in terms of Hopper sales. And by the end of this fiscal year, it should be down to minimal levels relative to Nvidia's revenue base. And so this product transition, I think, is one of the reasons behind kind of why the implied move is as high as what it is. So
talk to us about valuation. How do you think about valuation for this name? I mean, you look at the growth, and I know a lot of folks are saying this is actually a name that can grow into its valuation. How do you feel about that?
Well, I think Nvidia's valuation has never been a reason why the stock has done what it's done. And what I mean by that is, the multiple expansion hasn't been the driver of the stock. It's been earnings growth. In fact, I think most buy-side investors expect calendar year 2026 earnings to be in the neighborhood of $6 a share. And at today's price, that's just a modest premium to the S&P 500, despite much better growth, much better margins, much better kind of end market health relative to the rest of both technology as well as the overall market. So, to me, valuation has never really been the kind of headwind to kind of buying Nvidia. Really, I think the question a lot of investors have is, does this investment wave from hyperscalers, does that persist? Mm-hmm. Can you underwrite a long-term revenue base that grows from this kind of high levels that exists today?
And just some breaking news for you guys, kind of in this vein, is Amazon announcing a rebuilt Alexa assistant with generative AI. It will be renamed Alexa Plus. So just, food
How
for
creative.
Thought, right? We call ours Echo because Alix, Alexa, it can get confusing in our household.
Oh.
Yeah. So it's fair enough. Okay, so back to Nvidia for a moment. You talked about the product transition. This is also happening at a time when Nvidia is reporting earnings for the first time since 2022 that shares are down and kind of into the report. So I'm wondering what we're going to hear that on the DeepSeek side potentially, which is what really set things off.
Yeah, I think that you're going to probably hear Jensen talk about this as being a catalyst for more broad-based AI adoption, and not necessarily a headwind to NVIDIA's business. Looking at DeepSeek specifically, I think it's pretty clear by now that they didn't build their own foundational model. They, optimized what was out there. And it's not slowing down, importantly, what hyperscalers are doing in terms of investing. A lot of hyperscale investments end up being revenues for NVIDIA. And if you look at what was expected in terms of CapEx from, the likes of Microsoft, Amazon, Google, Meta, Oracle, from the start of the year till today, it's been revised higher by 20%. And year-on-year growth of CapEx is in the area code of around 33% per year. Year over year. So it's still a very healthy spending and investment environment. And a lot of those dollars, again, find their way over to NVIDIA.
So I'm just looking at the Bloomberg terminal here. The consensus for the quarter in terms of revenue is about just a little more than $38 billion. Is there a whisper number out there, Matt, that you're looking for, both for this quarter and maybe for guidance for the next quarter?
Yeah, I think the whisper is around 40, where the buy side sits, and then if you look out to guidance, around 42.5. NVIDIA got it to 37.5 for the fourth quarter, and they only guide one quarter at a time. And so, looking at kind of where that sits relative to sell side consensus, that's a little bit higher. But again, you're in the midst of this product transition, and so the historical pattern of NVIDIA delivering $2 billion above for the current quarter and guiding to $2 billion in excess of sell side consensus, might be a little bit questionable here, just given they're in Blackwell. It's just more of a complex product, and it's taking a little bit longer to ramp up the supply chain there.
What's going to be the read through for Nvidia on some of its peers? And I use peers a little loosely here.
Well, certainly a healthy NVIDIA report is going to translate into likely a move higher, as well as to some of NVIDIA's competitors. I think if you're looking at direct competitors to Nvidia. Broadcom comes to mind, Marvell comes to mind. They do operate in a little bit different segment of artificial intelligence because they're the custom ASIC manufacturers for the likes of Google as well as for Amazon. I think those are a little bit different than Nvidia because it's the merchant GPU provider, and let's not forget, Nvidia does own 90% of this market, so they're the big gorilla in the room for sure.
Exactly. All right, Matt, thanks so much for joining us. Really appreciate giving us a little preview there of Nvidia after the close. Matt Stucky, he's a chief portfolio manager doing the equity stuff for Northwestern Mutual Wealth Management out there in Milwaukee, Wisconsin.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.